the trajectory is very, very upward. You know, like, I'll put it this way. When Bitcoin was around even, say, 4 years ago, and the times before that, the first 6 to 7 years, everyone said, this thing is not real. It's a bubble. It's going to pop. And no one gets 10,000x return in such a compressed amount of years. Like, that's a tulip bubble. But anyone in technology that has invested in seed-level startups with a valuation of maybe, typically a seed-level startup is valued at $6 million at the start. And if they go IPO and then become the next, you know, Uber, Amazon, or so forth, you're now talking in the tens to $100 billion of valuation. So, and that journey takes around 6 to 10 years. And so right there in new technology, investors at the seed level are very comfortable with the idea of getting 10,000x on a winning technology. And that's essentially what we're seeing with Bitcoin. Those types of gains are very, very routine in new technology rollouts. The only difference right now is that Bitcoin just so happened to have a publicly tradable price that everybody could see, and retail, anybody in the world had access to buy that asset right at the get-go. And interestingly, the institutions, the smartest money in the room, they weren't allowed to because regulatory bars prevented them from actually directly buying the asset. So it's a kind of flipped the whole thing on its ends, where Bitcoin was open to everybody else except the big money. So I find that very interesting. There's about $500 trillion of assets in the world that people are parking money into as a store of value, and so that is the scale of capital that Bitcoin's going to take bites out of. You know, we like to call Bitcoin this digital gold, like it's this really nice to understand thing that traditional asset managers, traditional investors can grasp. But really, gold's only $10 trillion, and only $4 trillion is used for financial means. We're like, Bitcoin's already a quarter of the way there, and it's not going to stop. You've got like stock markets that are near $100 trillion. You've got real estate, which is like $250 trillion. Most people that hold these assets aren't looking for a house or 2 or 5 to live in. They're holding it as store of value. So once you get a glimpse of something as easy to access like Bitcoin without the trouble of holding assets like real estate, it's going to take a big chunk out of that. So there's no way Bitcoin's going to stop at the market cap of gold, which is 10 trillion. It's going to go a lot higher, which means that we're going to be going into the millions of dollars per coin, which is kind of hard to believe right now. But if you look at the share fundamentals and stretch it off over the long term, that's how cheap Bitcoin is today, and that's why the institutions are buying it. And they're buying it because they think it's going to be as good as gold, but it's going to go a lot higher. And the first step of it is that once we top out, I'm not sure how far it'll fall back this time under the current situation. We typically see, you know, an 80% pullback, $300,000 plus 80% pullback kind of brings us down into the $1 trillion range. And I can see right now the price discovery of Bitcoin is very, very strong in this zone around $1 trillion. You can look at that in terms of the price in which coins last moved on the network, and it's really clustering strong at this zone of $1 trillion. And you'll look at all the past bull markets, you can see as you roll back the clock, you get this very strong cluster at the base of the bull run, which is what we're forming now. And then we go really high, and then it's almost like when we top out, we come back to revisit that very strong cluster, bounce off that as a rejection off that low before we move into the next bull market. If that pattern plays out, then yeah, maybe we go to 300, we come back down to the zone here.